As the US dollar uptrend stalled through April and May, we highlighted that a reversal of most of the currency's gains since mid-2018 was likely. As the US dollar has fallen in the months since, we have continued to emphasise that the risks remain heavily skewed against the US dollar. Indeed, these risks have been most obvious in the past month, with the US dollar falling by 4% on a DXY basis. The principal driver of this broad move has been a 5% appreciation in the euro. However, other constituents of the DXY index, including the British pound, Swiss franc, Canadian dollar, and to a lesser extent the Japan's yen, also contributed meaningfully. To the extent that our baseline view, and indeed the risk to it, have now played out, our August market outlook called for a reassessment of the dollar outlook. Critical in this assessment is whether the market moves have been driven by hubris or underlying fundamentals. Beginning with the euro, this month's appreciation has likely been exaggerated by sentiment. The reason this has occurred is that the agreement reached by European lawmakers in late July to extend centrally funded grants and loans to individual euro area countries is seen as a game changer by markets with respect to both political cooperation and joint economic progress across Europe. That said, the euro's recent gains seem sustainable. Unless proven otherwise, we have to assume that the agreed policies will receive the approvals necessary by year-end, and thereafter that the funds will make an array of projects possible across the continent, providing sustained gains for activity and employment. With the balance of short-term risk skewed against the US, a further move higher for euro into early 2021 also seems probable. Our baseline view calls for a modest move to around 120 against the US dollar, but a stronger gain is a distinct possibility. As we look further ahead to the end of 2021, the global recovery from COVID-19 will also favour the euro over the US dollar, with the euro seen at around 123 by end 2021. The end 2021 forecast has two justifications. Very clearly, the US dollar has been seen as an economic safe haven through this crisis. As new case counts fall away and activity rebounds, investors will focus on chasing the strongest expected returns, which increasingly are in Asia and emerging markets, not the US. Secondly, as the recovery takes hold, investment and discretionary consumption will grow robustly, providing support for economies that make related goods, namely Europe. Sterling has greater headwinds than the euro because Brexit's terms are still to be agreed, and as COVID-19 has a tighter hold on the UK than the continent. That said, sterling is further away from its long-run average, and so will likely appreciate broadly in line with the euro by around 3% to December 2021. Turning then to Asia, the yen has only marginally outperformed our expectations recently. Spot US yen currently sitting just below our existing September 2020 forecast of 106. This highlights a key theme of ours, that while many of Japan's companies will benefit materially from resurgent growth in Asia, its economy is set to underperform overall because of structural headwinds. For 105 at September, we look for the US dollar to appreciate slowly against the yen to 108 at the end of 2021. China's renminbi is in the opposite position, however, primed to rally against the US dollar at a robust pace as its economy and the rest of the region recover from COVID-19. Uncertainties around trade with the US will linger until after November's presidential election in the US at the very least. But the negative will be offset by China's significant export exposure to the global markets recovering well from COVID-19 and those that have the strongest economic development prospects. China's renminbi has already begun to appreciate, US CNY falling from 7 last month to 695 currently. We believe on the way to 660 at December 2021. We'll see you next week.